following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this bright and breezy Monday, October the 26th. Last week of October. What a month. I'm going to show you some things that'll knock your socks off. Well, pleasure to be here, as I say, in this lineup, great lineup that we've already had this morning. Tom and Larry, just really great information. Hope I can add to that. And what we're looking at here, I thought I'd just show this quickly. This is the 10-minute chart of the E-minis, the December E-mini trading at 2,064 down 2. Hey, wait a minute. Hasn't it been in this range, basically 2,056 to 2,074 for quite a while? Sure it has, since the morning of the 23rd. And look what's happened. We've had a lot of action, but it's all narrow-based action. So if you're looking at this, you've seen just in the brief period since early this morning, you've gone from a low of 2,057.50 to a high of 2,068, round number high, pulling back, making a little bit of an arch formation right here, just stuck in this range. Wait a minute, stuck in a range after a move like we've just had, a spectacular move that's taken the Dow from the most recent low, well, of course, the August, the 24th low. You got the September low as well, the I call it the Freeman low, where we had a caller from one of my subscribers called to say, hey, he liked what was going on. He put in some bids and he got one. It was the futures, part of the contract. He got in the E-mini futures at about 1888. The low was 1861, and we were already off the low, and it was a fantastic move, going from 1861 in the E-minis to the most recent high of 2068 round number high. Now I think we're in a consolidation phase, as that 10-minute chart showed you. This is the 120-minute chart. Remember, I spoke about those three Chapman wave stalk leg formations right there. There's the first one. There's the second one. There's the third one. And now, wait a minute. I don't believe it. Is it even possible that that's not going to be a rectangle in the end? Well, we won't. I'm not going to anticipate that. It's got to actually unfold. One of the beauties of the chart pattern is that the difficulty has been to explain the difference between a rectangle formation and an oval formation. And basically what you're looking at here is the oval formation. That's the rally from October the 16th, going through to the 21st. Then you got the neck, the head, and the beak pulled back to 2007, and then you had a brand new move to the upside. So far, this doesn't have the characteristic. I suppose I could make it from here and say, this is in fact a stalk leg formation. So maybe that'll override the rectangle. All right, this is the nitty-gritties. When we have a chance a little later on, I'll get back to it. In the meantime, let's just do this. I want to run the numbers. Let me get rid of the rectangle just for the moment. See, there is a potential for a rectangle formation. I actually think we're going to be pulling back rather than going higher. I think we've got a digestive phase. I'll get into all that. Let's go to the numbers. The Dow is up. Dow is down 12 at 17,634. The S&P is, where's the S&P? S&P is down 3 at 2,071. You got the comp index up 9 at 5040. You see there's a divergence going on. It's really important. I said to my subscribers this morning, if we rotate here and suddenly you've got the healthcare giving a nice bounce. Look at the IBB. IBB, that's our favorite sector to watch. I'm expecting leg D. There it is. Leg D, so we're getting ready to possibly add to the short position from way up top. I don't know, we haven't done anything yet. Maybe there's a little more to go. We'll wait for the close today before we make a decision. So you've got a little bit in the healthcare sectors, not much, but enough. You've got 4 points up in the IBB, so it's trading at 320. I said the target was between 318 and 322. Today's high so far is the 322.21 area. Let's go on. We've got gold up 3 at 1166. You've got silver up 0.08 at 1591. Platinum's down 6. High-grade copper is just stuck. It's at 235, up 80 cents. You've got crude oil at 44. It's also just stuck in a range. But bonds are up 24.30 seconds at 157 and 29.30 seconds. That's big. TLT's up 73 cents at 123.93. And just real quickly, we go to the dollar, then we go to our callers. It's just such a lot to do here on a Monday. I like to do a review of the different indices. So let's just do this. TLT, so you can see it, and then the dollar. Yep, TLT is holding very nicely, and the dollar is up. Was up. Now it's down. It's down 30 cents at 96.83, having made a peak D/B. I'm inclined at this point to still think of it more as a B than a D, but I have to put the D because it's just the natural notation of the sequential alphabet letters. Really, the dollar has to break to the 97.50s, and then it's above the trend line, this cup formation. Remember, I drew this a long time ago, the reverse Y. Let's go to our first caller. We have got Scott in Safety Harbor. Scott, how are you?
Wow. Okay, Basil. Well, it went from my ears, as you said, right to the stock gods. Alcoa went right straight up to $11.
Good.
After we talked, you really didn't see any chance of that happening, but to me, it had all the indicators. So
yeah, okay. Now, just one quick thing. Let's just go to our. Oops, let me just type it incorrectly. Yeah, it's the one. It's actually the one stock over the weekend with all the stocks I looked at. It's the one stock I didn't look at. Oh, wait. Yes, it went to
October, I think.
Yes, it went to 11. Correct.
And I was going to get into a very large position, which I did, and I believed in 11, and you believed more into the 8.
Okay, and now you were 100% correct, and now I'm 100% correct. Not quite, because it went down from the 11 to the 9 area.
And as usual, I keep trying to help people make money with Gilead, and no one ever wants to listen to me, and you can't even imagine, the money that I've made off Gilead. You were looking for it to pull back, and I was looking for it to, zoom up, and it zoomed up.
Whoa. First of all, I said it was a peak D. You remember that it should be pulling back, which it did. It pulled back, and it wasn't much, but it went from 103.95 to 99, and then it had the spectacular move. And one of the reasons is I think that the IBB at this particular stage has gotten to the point where it is so over. Now over the last 2 weeks, the news stories have come out one after the other about the problems that the whole sector could meet up with. And that said to me that we don't want to add to any short position. And in fact, there could be a rally. That's what I was expecting.
Isn't there some time, though, in stock trading, and the guys that I know that, to be honest with you, that are losing their rear ends, I trade, and I'm a former advertising executive, and I just trade on the news. So when you have so much going into Gilead, and there's no-name biotechs that are $50, $60, $70, $100 making no money, and you have Gilead, which is the premier hepatitis vaccine in the world.
Correct. Yes.
But yet there's people that still won't look at that. I mean, it's in the news every day in the medical forums, and I practically begged people I know to get into it, and I don't know, and I like this and that better, and Celgene, and yet Gilead keeps falling back and giving people opportunity and powering up.
Well, the Celgene, I think, has had a stronger move in that Gilead, GILD is the symbol, folks, 110.04 up to today. Let me just do this one more time.
The trading range on Gilead in the past year has made me a fortune. I mean, it's bought me another house if I want one. I mean, it's come back to 120 times and powered back up into the 108s, 9s, 123. I mean, tomorrow, look at the news for tomorrow on that stock. There's nothing that's going to hold that stock back. The earnings are ridiculous. Unfortunately, hepatitis is just ubiquitous all over the world.
It is. So okay, so now you've got Gilead, and it's doing. You've really nailed it this time. Once again, you've got your Gilead profit in. So this is what I just wanted to tell you here. It's going to be very important. In a moment, I'm going to show you something with a chart
And I do have a stop in by the way at 109.50 at this point because I've taken so much profit on it off of the 102 that.
And this is leg D in the daily. I think that just for the day, the high might have been made here in Gilead as we're speaking. So it's trading at 109.86. But this is really important.
And earnings are tomorrow after.
Oh, it's tomorrow. I was going to say earnings are going to be very important for some of these biotechs. The real thing that I'm looking at here, because it could be a harbinger of things to come, is that if Gilead talks about the past as if the past was the characteristic of all the gains that it's been making could change looking ahead, that will take the earnings report and turn it upside down if it's a good report, but the outlook is discussed.
Well, they're very conservative in their guidance and so forth, but with Gilead having that high in the past of the 123, people kind of look at that. What was happening? The way I look at it is really simple. When it was 123 a few months ago, the company wasn't as strong as it is right now. It just got approved for Japan and a couple other countries, so it's a stronger company now. It's making more money now. That's the way I look at it.
Okay, well, I can't disagree. I think you've done very well, and it's broken its downtrend line. So you say tomorrow is after the bell is in the morning or after the close?
After the close tomorrow. And one day, Basil, I hope somebody will tell me, someday while I'm still on the planet, maybe God will tell me one day, but why people invest in these biotechs that have no sales? How can you buy a stock that's $50, $60 that has no sales? I just
because there's first of all, a lot of people don't do much research when they're doing the biotechs. They just get the name and they've heard it before and they buy it. That's what happens now. Two things that are really important.
Waiting for BCRX and the bird flu from 5 years ago.
Okay. Just remember, a chart pattern is a chart pattern. And what I'm looking at here is that Gilead needs very quickly from the 109, 110 area to close above 115. It has to do that for a 1 week. 1 week's chart has to close above 115. If it does that, all of a sudden it's basically recycled in my work in the daily and the weekly, and that would suggest, okay, now I can look at the upside. But I can just tell you this, I'd be looking at it askance if Gilead starts to trade under 103 2 days after earnings. That, to me, that's one of the criteria, and I think it's going to be very influential on Celgene and many of the others, because Celgene has the same chart. The monthly is just a little bit stronger as a chart pattern, not the weekly, but the monthly. So I'm going to watch all of these, and they're all in Ds and
E's. They had an AbbVie, which is another company which had a negative thing coming out about their hepatitis, had some contraindications, which helped Gilead, but warning to everybody, never hope for good earnings, because like you said, even when the earnings are good, the street might digest it differently.
Good. Thank you so much, and congratulations, Scott.
Thank you.
Great call. Speak to you soon.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So we're looking at Amgen, part of that IBB crowd. Amgen is up. AMGN is up to 94 at 158.66. Leg E. Technicals are very good. Stochastic in the weeklies. This is going to be the big test. This is, out of all the myriad techniques under the aegis of the Chapman wave, the one thing that requires a new sensitivity to the analysis, a new, how can I put it? You need to include other time frames and other areas of other technical tools, is when you come off a bottom like this, especially a little W bottom, and the technicals are still very poor. See, the stochastic still at 42% in the weekly. The weekly MACD hasn't yet crossed positive. It's just about to, but sometimes it crosses positive and it just immediately turns down. So this is going to be really important. That's why I'm saying that the earnings that come out of Gilead Pharmaceuticals, that is tomorrow afternoon, could be a harbinger of certain things here, because it's going to set the pace. One of the better, I should say, pretty ideal circumstances that have started to change in the biotech area. But there's so much written about it that my thinking was the new people that are shorting are going to have a tougher time, because it's going to take a little bit more. And they've already had look, Gilead's gone from the 130 low. Was that a round number low? 130.09 low on the 28th to today's high of 158. I'd say that 28 points is pretty darn good. 28 points, that's 1 Whoa, that is a very nice rally. So what we're looking at here is Gilead has gone from a low of 93.5, was it? 93.19, round number close. And then it spirals up to today's high of 93 to the 110 area. So, hey, we're looking at pretty good percentage gains. Okay, this takes me to an area that I wanted to look at. Let me show you something. And you'll be shocked when you see it. This is what I sent to my subscribers this morning. I did a ton of work over the weekend, starting on Friday. Work that I sent out in different analyses of the Dow, the S&P, etc. But look at this. Okay, sure, I'll look at W or Vigeo in a moment. Let me just finish this. Look at the Qs spiking up on Friday. Now, I'm always a little hesitant when I hear, look, you remember I spoke about this? I said, what is it called again? Amazon. Amazon spikes up on Friday. And what does it go to? It goes to a leg D. Friday spikes to Ds and Es are always something that make me a little nervous, especially when you've got weekly Ds and Es. So, yeah, we are. It's up 3, but it hit a high of 620, 619.45 on Friday. So it's 17 points off that high, but holding quite nicely. Google, let's just go to Goog right now. I can go to Google, G-O-G-L. Yep, spikes up. And what does it spike up to? Probably an alternate count, A, B, C, F/C. But on a Friday, spiking up to that says, oh, be a little careful here. And the weekly chart is in E. If you look at running through those big names, well, I'll come back to the big names because I don't want to waste time. I want to go to the Qs to show you something that's really important. So the Qs spiked up to D on a Friday. MACD is good. MACD, the moving average convergence divergence, and the slow stochastics at 92%. That is very strong. So I don't want to go short at that point, something that's that strong, but I'm watching it real closely to say, wait a minute, is this going to be a buy on the next pullback? So now I've done the daily. I've looked at the 120-minute chart, and the 120-minute chart has a G/C, which says, hey, there's a chance you can still make a D above 113.24 if you don't take out the low of Friday, which is the gap low of 112.07. And so far, the low today is higher than that. So now I'm looking at this, and I say, wait a minute. Let me go to the weekly chart. I look at the weekly chart. No, what happened was I'm looking at the monthly chart, and I'm saying to myself, wait a minute, that looks like a V. Let me go to the weekly. And I say, that is absolutely a V shape. The MACD is also crossed positive with a very strong fast-moving average cross over the green line, over the slow-moving average, the red line. That's the 9-period differential. Stochastics wasn't at 80% on Friday, but it was at... I think, yeah, it was just on 80%, and now it's at 81.73%. And I'm looking at it and I say, wait a minute. Now, we have a short position in one of the indices, picked up on Friday, a very good price, still holding very nicely now, up a little bit. And I'm looking at this and I'm saying, wait a minute, how bearish can you be when you've had a 26% decline and a 33% gain? I'll talk about that when I get back. This says something spectacular on the downside has to happen rather than the upside. I'll be back. We'll talk about it.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 21. S&P's down 4.5. So here's we're going to go to our next call right in a fraction, but I just need to show you. Remember that left side, right side price time match that I had on Priceline? I said 13.95, round number high of peak D back in the beginning of August, should be taken out based on the Chapman wave inside wedge, left side, right side price time match. Here's the left side going to the midpoint right there. There's the right side. That's the plumb line right there. Sometimes the plumb line is exactly at the bottom. Sometimes it's exactly at the top. And in this case, it was at the top. And we had until Wednesday to break 13.95. Today, price line's up $50 at $14,115, and that makes leg D. This is what we were anticipating. Leg D in the weekly chart, and there it is, weekly chart right there, and leg D in the monthly chart. It's an amazing thing how all this has worked out. And we're going to go to Mark in Denver. Mark, how are you?
Good, Basil. How are you today?
I'm well, thank you.
Good. So let me tell you what I did, and then you tell me some targets for me.
Okay, very good. That's fine. Yep, here we go.
All right. So on Friday, I bought some puts on the IYR.
Okay.
Round number high.
Well, the reason being?
Tested the left side high. Looks to me like it made a peak D. And I am. And it wasn't a peak D on Friday. It was a leg D, and we know that leg Ds can go higher. I was thinking
So-
because it was failing. That
So
day,
you
if the
anticipated it,
rest
right?
Anticipated. Yep, exactly.
Okay, good.
So now I'm looking for downside targets. I have the 76 puts, which I bought when the iWire was about 76.69, which is where it was testing the left side highs from. Actually,
So
those highs
that's the
go all
left
the way
side
back
high
to
from
May.
early September, right?
Yeah, and
Okay.
actually, those highs go all the way back. Similar highs go all the way back to almost May. There's similar price targets in there. So I was wondering what you think.
Okay, so there are a couple of things going on here. The IYR is the iShares Dow Jones US REITs Index. It's got SPG, that's Simon Property. It's got American Tower. It's got just a really, actually, it's a real mix. It's got PSA, which is a storage company. So it's got a mix of a lot of things in it. But most of it's got Boston Properties as well. What's most important about this is that I've been looking at it very closely. In fact, we've spoken about it, whether or not, and this was way back after the August 24th low, and then the retest in early September, we had looked at it as if perhaps this could be a safer way to look for dividends than just pure dividend stocks, which kind of get smacked around when they're, say, Dow-type dividend stocks. Well, it turns out that, in a sense, that's absolutely correct, because it's gone from the 68 area to the 77 area, round number high on Friday. So that's a pretty good move, 9 points, about 13%. But what's really important about it is that the high that was made last week took out the previous high. So I'm looking at this and I'm saying, okay, if you are looking at trend lines, there's a channel in the weekly chart, it's broken that. If you're looking at 200-period moving average as a springboard, it's used that. If you're looking at the MACD rallying all the way, at least this time it's a 76%, we saw that the big rallies that we've just had in some of the indices and some of the stocks, some of the IBB stocks, haven't done all that much in the MACD and stochastic of the weekly charts. In this case, it has worked together. And if you look at the monthly chart, there was a peak E that was made an alternate count. I could still make a case that it could be E/B, but a lot has to happen. So now my big concern is that we've got just the rest of the week to go, and the monthly chart is flattening out in the stochastic at 24%. It hasn't started to climb, and when it flattened out before, it made that arch formation and did a retest, successful retest. So this is going to be a very critical month, and when I put it together, you'll see when I put it together with a QQQ in a moment, what we're looking at here is, are we looking at, and this is the real big question, this is the question for me that I spent the whole weekend pondering, and I think I've got an answer to it. Was the August 24th, even though it was an aberration, and even though 500 of the 1,000-point decline was really an arbitrary thing, it was computerized damage to the downside. It should have stopped way earlier, but it didn't. But it did repair the damage very quickly by reversing sharply. So now the question is, was that in my Elliott wave analysis of the Dow? Have we really started the accelerated move that goes in wave 5? This is my interpretation of Elliott wave. It doesn't mean to say it's the real thing. It's just my interpretation. But I do it together with the Chapman wave methodology. And if so, how does something like, after all, if you're an accelerated move and you're looking at the potential for a higher market over the coming months, even though there could still be a sudden 8% decline or a sudden whoosh to the downside, if that is the low, then surely you would be looking at the iShares as being part of the move that goes up, because there are a bunch of companies within that index that really do benefit from a higher market. And that's the reason why the RTH, the retail index, which is basically looking at some horrible companies doing just very poorly. It's also looking at some companies, just a few, that are holding really well. So here's my answer to you. I think your short term is exactly the same. We've got the same short term position, not the same index, but we also took a short term position on Friday, thinking that there should be a consolidation. Doesn't say how deep at this point. I think the close today will start to give us an indication. But the IYR is down 45 cents, doesn't sound like much, and it's 75.45, so it's only 0.59 down. but it's starting to test the 9-period moving average after a potential peak D, if that's the case, after a round number high, after a peak E in the 120-minute chart with a flat stochastic, which normally says if you're short when the stochastic's down under 20%, be careful because there could still be a decent pop-up before it comes back down again. You're not even getting that today. I think you've got a great position, but there's one thing. Do you have enough options to split them up, or is this going to be all or nothing?
Oh, no, I could definitely split it up.
Okay. If it's a split we're looking at, what I would do is, if there is a rally today and it takes the IYR somehow, instead of being 75.45, it takes it back to the 200 periods SMA at 75.90 or anywhere close, I'd get ready to eliminate at least a couple of your put positions, because it's saying the MACD hasn't crossed negative yet, and the stochastic's still at 86%. There could be enough residual strength just to say, I'm in a trading range. I'm not going down too far. I'm not going up too far. But if you have puts, you've got to take what you can whenever you can.
Right. No,
you know what I'm saying, right? Especially being options. But the other thing is this. I think you're in the right position, because if by the end of the day there's an acceleration to the downside in the market, and the IYR, the iShares, Dow Jones US REITs Index Trust, starts to break from 75.47 and actually gets towards 75.25, my 120-minute chart is suggesting that even if there's a little bit of a bounce, it's going to have to do some testing of the low 74s. So now what you've got is you've got a situation where you already got a profit, and if you want, you could even take just a couple now to just say, hey, good eye. I want to keep my core position, but I in this particular market, you can see that there are attempts to try to rally. You can see that there's a rotation. Look at the IBB, still up 2.64, trying to hold in there. There's some rotation going on. So you need to see an acceleration down. And the weekly chart is saying good action, and the major support on the IYR on the weekly chart is at 73.90. with 72.70 being absolutely imperative to hold. A close below that this week would say, uh-oh, you're on the wrong foot, mister. The IYR is going down. But at this point, I think you've got the right thing for the because this is the rudder. You've got it before the turn. You've got the acceleration of the turn. Now you want to see the follow through.
Right. Okay, sounds good. And if you have a minute, what's your thought process on how high the auto parts companies are flying, based on the fact that the auto actual manufacturers are also doing well?
Well, this is A, B, C, D. AZO is now
Orly,
an alternate count of G/D. But once it's in D, you just eliminate the G. You've still got G/C in the monthly chart, and you've got the AZO daily is an alternate count. I have to call it an alternate count now. A, maybe it's B. So, it's really hard to explain, because the new cars have accelerated to the 17 million level. This is 17. Detroit was not talking 17 million for a long time. They were lucky to think 15. Now we're at 17. So let me run them. AAP trading right now, it's kind of unchanged. See, there are a couple here. What's the one that I'm looking at all the time?
Orly.
Yeah, Orly.
Yeah.
All right, now that's got a little doji candle high. A, B, C. I could make a count that that's a D. Oh, earnings come out on the 28th. That's in 2 days' time.
Okay.
On Orly. Orly and Gilead are going to be kind of the canaries here. They're going to tell us a great deal. And the last time we shorted Orly was the other day at 252.17.
Yeah,
and we got out with a minus for 1.7% loss. Lucky, because it just skyrocketed from the 252 to today's high of 260.73. But it made a peak F. That's the way I counted it. Now, I have to say, that could be now, because the low from that high on the 12th of October at 258.86 didn't take out the low after peak D. So now I can go to the alternate count and call it a G. Let me see, what did I want to call it? A D. I could actually call it, if I wanted, right here, it's being covered by all the words I've got there, which says 10:28 earnings after the close. I've started doing that because I just never remember these things. So I'm going to move that to there, and that's what you can see. So I think we're real close to the start of a turn down. We haven't got it, and I've anticipated it. Way back I anticipated with, if I remember correctly, with Orly. I don't think I've got it on this particular chart. Way back, short and half at 220, back in May of 2015, May the 12th, for a minus 240, a minus 1.1% loss, and I immediately should have switched to the long position. And I knew that if I missed it, I never did switch to the long position. And lo and behold, we've just done the same thing, except this time there's enough evidence to say this is getting really toppy in the order. And when the auto parts sector goes, it will only go, you see, GM is having that pullback and peak D. And what I said to subscribers, we are longer position in GM. Right. And I say for swing traders, if you want, we're not, but you can get out of your position or part of your position right now. I actually I like the move in GM. I want to add to it in certain places. So that's just saying to me that whether it is, and this is going to be a whole new thing to come up, when we do get a major downturn, is the money, not free money, but the easy money that I believe that's being given for loans on autos, leases, and all sorts of things, is that the next penalty that's paid? But that's helping the auto industry. Not only that, the cars are looking better, the quality's improved. So I find this very legitimate. The timing for the auto parts to start coming down because fewer people are needing to buy the auto parts because they've been buying new cars, that's a slower process. So I'll keep trying to time it. You know that I'm very persistent. When we do get it, we really nail it very nicely. Yeah. But we'll see. We'll see what happens here.
Okay.
But it's a really good question, and that goes to the heart of both the rotation that's going on in the market, why the IBB could be rallying here when the general market's quite weak. Why? Because fund managers are forced to constantly be looking for what they think is perhaps the bargain on the pullbacks. So now we're going to be watching the auto industry. If the auto parts start to deteriorate in the next 2 weeks, we'll see whether the rallies that come in, those sharp, quick moves to the upside, make new highs, or now we're going to start seeing for the next 3, 4, 5, and then 8 months or 10 months, lower highs and lower lows, as if this is the next sector to come down. It doesn't have to be, but I'm going to watch it real closely, as you know. Thanks for calling, Mark. Always appreciate it.
All right, thank you. Appreciate it. Bye.
Thank you very much. So, okay, now let's do this. We've got, what happened here? The Dow is down 27. The S&P is down 5. I'm going to go back. You remember price line? I was talking about price line. I had a target of a brand new high. Why? Because I wanted to see leg D. This is the thing about the beauty of the Chapman wave. It's such a simple concept. It's really not always easy to implement, but it is the design and everything about it, the whole methodology, the way it works. When it's smooth and it works well, look what you do. You got your left side cup formation. You got the exact plumb line right here on that low there. So that's your plumb line right there. You got the left side right here. Left side left here, I should say. Left side left here, and the right side right here. And what did we want? We wanted, it's 1 week early. It just came in today instead of next week, and you broke to leg D. And there's the inside track, Chapman inside track, bam, just broke right through. And the week, monthly is in leg D. I'll be back to finish up with the Qs.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, I had a question about BX Blackstone. Now, I might be wrong, but I'm almost sure I remember reading that Blackstone had just bought, what's it called, Stuyvesant something, you know, that part in Manhattan from 12th and 1st Avenue, 12th Street and 1st Avenue. There's this huge complex, and then it goes to the hospital, and they wanted to buy it. It was very unusual, and they wanted to keep the rates low. The reason why they bought it is they wanted to keep the tens of thousands of apartments there. Yeah, there it is. Yeah, with another company from Canada. Correct. Yeah. So I thought that was very admirable. But as far as the stock is concerned, would I buy it? You know, it's trading at 34. It's got such a lot of resistance. But if you want, you can just start a small position at 34, 38 right here. I would have a 1-point stop. The reason is it should not take out 33.90, the 9-period moving average. It shouldn't close under it. But what's important is that it needs to get very quickly to the 34.80 and then 34.90 and then 35.10 and then all of a sudden 35.50s. And that's a point and a quarter away. It shouldn't be a big deal. If it can do that, all of a sudden the weekly are saying, we've got a little more upside that can go because the 200-period moving average of the daily is at 36.54, and it'll become an attractor, a magnet. And at this point, it's a repellent. So would I do anything else? I'd say a little bit now, and only if it can break into the 35. What did I type into the den? And I'd add a 35.40. I shouldn't have said 35.40. That was a little high. I would add, if it's holding nicely, and by Tuesday afternoon, not later than Tuesday afternoon, by Tuesday afternoon, you can get to 34.75. I'd add just another little bit. And the reason why is because it keeps wanting to make a higher base. I like that. And all it needs to do is eventually break out at 35.25. It's kind of breaking out because the next level is nicely up at 36.04. And then all of a sudden you got the magnet of that 200-period moving average. Okay. The reason why I wanted to bring it up is I also remembered reading about it. I'm doing all this work I can to try to test my memory, even starting to try to memorize music and stuff. I find it's important to do. That's all. Together with the tennis, as you get older, it's important to keep these things going, right? So, okay, we're looking at. I said the QQQ. Let's go back to the QQQ. Look at this, down 26%, up 33%. You've gone almost to the 114.39, 1.15, $1.15 or something like that, away from a new recovery high above peak D. How can I be bearish here? I mean, not to say that I'm not expecting some kind of a pullback, but I have to look at this and say, hey, the MACD and stochastic was saying to me, it's not going to happen. Price says it did happen. I've got to open my eyes and say, what's new? And what's new is that I can make a case, a bearish case, that there's a potential for the left side arch formation to become a right side arch formation. But that doesn't mean to say it's happened or it's going to happen. It's just saying there's the potential for that if, and all of a sudden you have to say if what? Well, if it's 112.65, the QQQ, if it takes out 107.20s, and then by November I'd say got to be soon. It's got to be before November the 15th. In that week, going to the 15th, it's got to be underneath. It's got to be, first of all, it has to be under 109 to make any real kind of turn. Then it has to, on a weekly close, it has to close under 107.25. And then the 200-period moving average of the dailies at 105.87. It's got a lot of support levels. It's got 108.47 in the 9-period moving average of the weekly. I like what I'm seeing here. That doesn't mean to say we aren't getting toppy, but it does mean to say I don't know what can happen to get you back to 84.74 in the QQs. We'll follow this up tomorrow. Don't forget, folks, my newsletter is the opening call. We are actually short the Dow at this particular point. We'll see what happens. Just for just a digestive few days. That's what I'm expecting. Could be more. We'll see. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,